Good morning, everyone, and thank you very much for joining me. This is the Morning Market Review. It's Monday, it's the 15th of May. My name is Russell. I'm a Senior Market Specialist at FXCM. My email address is rshaw@fxcm.com, and if anybody needs to email me, that's the email address to use. Just going to go ahead and bring up our disclaimers, and we'll start off with a high-risk investment warning. I hope everyone had a really good weekend. Hey, Zanetta, good morning to you, and welcome as always. Thank you to everyone that has signed in this morning. Much appreciated. And I'll just keep this on screen for a few moments. I want to start off with the China 50. I was taking a look at the China 50 and perhaps switching my view there. I'm not sure. I'll show you what I'm looking at, and you guys can let me know what you think. Here's our market commentaries disclaimer. I'm going to just keep this on screen for a few moments as well. All right, and just our references. So we'll be using MarketScope 2.0 and TradingView.com. And let's go ahead and bring up TradingView first. And we're looking at the China 50 here. We're looking at the China 50 on a monthly timescale. So we're really looking at this in a long-term point of view. And what I want to do here is introduce the COPAC indicator. So just go through to indicators and COPAC. Now, COPAC, one of my favorite indicators in terms of trying to find a market bottom. It's generally quite accurate. It's not perfect. There are whipsaws, but the COPAC, its only function is to give a sense of when the beginning of a bull starts. That's all it does. It doesn't tell you anything about a bear, doesn't tell you when the bull's going to end. It's just to give an idea of when a bull might be starting, and then you've got to go and use other technical tools. The way that the COPAC works, there are effectively two triggers that we've got to know. So the first thing is we've got to know if we're below zero, which we are. So I'm going to just stick in the zero line. Yeah, I'll make it red just so it stands out. So we're below zero, that's trigger one. And then trigger two, it's got to turn up. It's got to turn up from below zero. And generally what happens is, so here was a good one. It led to a nice movement up. Here was a good one. Led to a nice movement up. A little bit of some heartburn over here. And of course, this is where we are right now. This one, if we go back to 2008 to about 2013, here you can see some whipsaws. Let's make these red. So there are whipsaws. Okay, here's another whipsaw. Okay, this is a good one. Make that one green. Okay, so the idea here is we've got a COPAC signal. How much trust can we put into it? And this is where it gets a little tricky. I've gone through to MarketScope 2.0. We've gone down to a weekly, and let me just zoom in here. So the last time we looked at the China 50, I suggested perhaps a topping pattern. I'm not so sure about this anymore. Here you've got the left shoulder. Here you've got a head. And well, this is turning into quite a complex right shoulder. It's not breaking the neckline. So I'm not certain if this is a topping pattern or not. I can see that the momentum is below 50, but it's still hugging the 50 line. So we're not too far from sort of the neutral area here. Another potential way of looking at this, given that the COPAC has given a potential signal here, is let's put in Stan Weinstein's 30-week moving average. So let's pop that in. So we're just putting an EMA. All right, I'm going to make this black. I'll make it slightly wider so we can all see it. All right, and hang on a second, this doesn't look right. Yeah, sorry about that. Just want to change this to 30. Okay, that's better. All right, so with Weinstein, he would say this is a distribution. He would say this is a markdown. He would possibly say this is an accumulation. Possibly, right? That's the challenge right now. Is this accumulation? And if it's accumulation, we would want to see a markup phase after that. And to really conclude this is accumulation, it would need to get above the 30-week moving average, and the 30-week moving average would need to turn up. But take a look at this. Instead of a head and shoulders top, could we perhaps be getting a head and shoulders bottom here? What do you guys think about that? So it's still not conclusive because the pattern hasn't completed, but here's the left shoulder. Here would be the head, right? Here would be a potential right shoulder, wouldn't it? And I don't know if this is going to complete or not, but you can see what we're referring to there. Assuming it is a head and shoulders bottom, we can put in a target. Remember, targets are just academic. They sometimes hit, they sometimes not, but they'll give us the bias, and this bias here would be to the upside, right? This is not a head and shoulders bottom yet. It's got to complete. But I think the jury's still out for China 50. China 50, I just wanted to update that the last time we spoke, I said maybe it's looking a bit toppy. I'm not so certain I agree with that analysis anymore. I think we might be still in accumulation here. So I'm going to look at this this morning. I'll write an article on China 50. I want to introduce some fundamentals as well, just to get an idea of how the economy is going along. The CPI that came out last week for China was actually quite disappointing. It was 0.1%, which is very low. There's a demand problem. There's a demand side problem in China. So we just want to do a little bit more of an analysis there and see what's happening. But this is one I think that we carry on monitoring. It does look very interesting to me. So that's what I wanted to introduce in the for the start. The next instrument I want to introduce is the VIX. We haven't looked at the VIX for a while, and once we finish with the VIX, we'll go through to US dollar, euro, pound. But let's just take a look at VIX as well. All right, I want to look at the VIX on a weekly basis. Let's get rid of the COPAC. So the way that I like to analyze the VIX is I like to put an RSI underneath this. So let's put in an RSI. And I'll show you a neat way of taking a look at the VIX. And then underneath this, let's put the S&P 500. Why we put the S&P 500 is because what the VIX is, it's a volatility index of the S&P 500. It's effectively looking at the options on the S&P 500 constituents. So let's put the S&P 500 underneath that. We'll just use the FXCM SPX 500 CFD. And let's make this logarithmic. Just make it a little easier for us on the R's. Okay, so what we want to do is we want to put adaptive moving, adaptive overbought, oversold on this RSI. So what do I mean by adaptive? We're actually going to use a Bollinger Band over the RSI. So you'll just right click on the RSI, you'll go add indicator. Type in Bollinger Band. Sorry, I've hit the wrong thing. Let's just put in a Bollinger Band again. That's better. All right, I want to just take this guy out. We don't need it. All right, so we've got a Bollinger Band over the RSI. I just want to amend the settings here. So what I like using is 50 and 1.5, which is slightly different to Bollinger's settings in the book, Bollinger and Bollinger Bands. I think he uses, I can't remember exactly, I think he uses a 40 and a 2.1, but again, that's, I've got to double check that, so subject to correction. Take out the basis. We don't need the basis. Okay. All right. So what the VIX is, when it moves down, there is a whole lot of call options that are being taken out on the S&P 500. Call options are bullish in nature. When the VIX moves up, it's there's a lot of put options that are being taken out. That's bearish in nature. But typically, what we want to do is we want to use this as a contrarian indicator. So when we get too complacent, when there's things are too bullish, we're going to start to worry. When things are too bearish, well, we're going to start looking to see if there's some opportunity. I don't think we're too bullish here at the moment. The way that I measure that is on the oversold of the RSI. Take a look at this. So we oversold here. We oversold here. We oversold here. Okay, now what happens at each of these oversold? What happens at each of these oversold? Sell down. Right. Sell down, not quite as severe. This is about a 2-3 week. This is a severe sell down. And of course, a sell down. Yeah, we don't have an oversold reading, so I don't think that we are too complacent yet. We're just going to watch this. We can be getting to a complacency region that when we think things are so good that there's little chance of reversal is exactly when it probably will reverse, right? We're not quite there yet. So I wanted to show you just the VIX still got some room to move to complacency. So we still got some room to move here. I don't think we are there just yet. Very interesting. All right, with that, with the VIX done, with the China 50 done, let's go through to US dollar, euro cable, and we'll use market scope for this. And let's go through to the US dollar first. Hey, Kobus, you should get an prompt to update, so that should fix up the issue that you had. Just let me know when it's fixed up. Just send me an email, but should be fixed now. Okay, cool. Alrighty, so this is I think we've got to watch this. Okay, I think we've got to watch this. Let's take out the left shoulder. Let's take out the head. Let's take out the right shoulder. Okay, let's take this all out. And what's happening at the moment is we've got this debt ceiling debacle that's going on at the moment. The debt ceiling is a very serious issue. If there is no agreement on the debt ceiling, the US effectively default on debt. It hasn't done that since the 1780s, okay? It's unlikely that there won't be some sort of resolution. I would expect there is going to be a resolution here, but because there is a certain amount of uncertainty, the dollar has been supported. The dollar is a safe haven, and because there is this debt ceiling issue that's outstanding, it's funneling some money into this dollar. What's interesting for me is what happens if we relabel this as follows, okay? It's not my preferred way of labeling. I'm still looking at the dollar as potentially topping out here because I think that the hiking cycle has come to its end. I think that the recessionary forces are mounting, and the potential rate cuts. Well, there's a division here. Some market participants think there will be a rate cut. Others think that there won't be a rate cut. Tending towards that a rate cut probably is likely, and that should push dollar down. But we've got some support here. Got some support here, and that's because of the debt ceiling. If you take a look at the RSI, it looks like it's about a cross above 50. And if we go down to the dollar here, I mean, the daily, it's pushed into zone 1. So at the moment, this debt ceiling is a story I think we need to pay attention to. It is dollar supportive. Okay, I think that as soon as it has a resolution to it, it's going to act actually not as a tailwind, but as a headwind. But at the moment, it's acting as a tailwind. So we are in zone 1. There's a pullback here. Just see if there is going to be support at the central pivot. Okay, because the debt ceiling now, just in terms of when the next important meeting is with the debt ceilings tomorrow. So we're going to get news tomorrow. Is there going to be an agreement or not? So tomorrow is basically an important day with regards to currency. We take a look at the euro side of things. If the dollar is being supported, okay, then there is pressure on the euro. So this 110 is acting as technical resistance. Let's put that in. But the real sort of fundamental factor that is weighing on the euro is this debt ceiling. Okay, so you can see it's pushed euro down. This ledge that we were watching now is broken to the downside. We are now in zone 3. Okay, well, okay, if we're in zone 3, let's take a look at see if the central pivot acts as resistance. Okay, in other words, do we react off of? So we've got to see the EMAs turn to the downside. We've got to see the stochastic turn to the downside. Again, I wouldn't think this is a big trend change that we're seeing, but I think that it's important for us to acknowledge that the debt ceiling is having an effect here. Let's take a look at cable. All right, and cable is testing its support level, which is this upper level of resistance in terms of this rectangle. If you take a look at the daily chart here, it has dropped from zone 1 into zone 2, so it's not quite as weak as the euro. So being in the neutral area, perhaps a little bit of no man's land there. All right, let's look at one more, and then we will call it a day. Let's take a look at the DAX to see how the DAX is getting ready to open. So I'm a big fan of the DAX chart, and it's getting really interesting now. We've got a primary uptrend, higher trough, higher peak, followed by a higher trough, higher peak. You can see the RSI is moving nicely above 50, below 80. But where it gets challenging is on the daily. Take a look at this. And I think that to actually appreciate this, let's go back to TradingView. Okay, let's just bring in the German 30. Okay, so we'll use FXCM's German 30. And let's get rid of the RSI here. Let's get rid of the S&P. So we've just got the DAX here. I want to go to the daily chart. And you can see that this daily chart is moving sideways. Okay, it's moving sideways. It hasn't done anything really since the middle of April. Okay, but let's take a look at this in terms of Bollinger Bands. Let's throw in a Bollinger Band. We'll throw in 2 Bollinger Bands here. And I want to throw in the Bollinger Band widths indicator. Alrighty, and let's just change these up. Let's make this 20 and 0.75. And let's make the second one 20 and 2. Just take out the basis and make the upper and the lower red, just so we can differentiate our zones. And you can just see we're getting a tight squeeze here. So my view is something's going to happen to the DAX. We're getting a squeeze. It's called, Bollinger calls this the squeeze, and effectively the squeeze is the precursor to an expansion in volatility, and that expansion in volatility is either going to be to the upside or the downside. I think because we've got a primary uptrend, my preference is to the upside between in zone 1, which is between the upper red and the upper blue. Take a look at the squeeze here. So the Bollinger Band, sorry, I've got the wrong line there. So the Bollinger Band width measures the width between the upper and the lower bands. And you can see every time there's a squeeze, I'm actually going to move this up to there. There's an expansion. So there was an expansion here to the downside. There was an expansion here to the downside. I don't expect this expansion to be to the downside. I can't discount it, but I would expect the expansion to be to the upside. Why would I expect the expansion to be to the upside? It's because we've got an uptrend here, series of higher troughs, higher peaks. We've got good weekly underlying momentum. So the zones will tell me if I'm right or wrong. If there's an expansion and we go through to zone 3, which would be between the lower red and the lower blue, then the expansion is to the downside. If we go into zone 1, upper red, upper blue, then the expansion is to the upside. But we can't stay at, the markets can't stay at rest for long. At some stage, there has to be an expansion in the volatility. And that's what Bollinger theory is all about. Bollinger theory is about the cyclicality of volatility. We had a very, very tight squeeze at the moment. Volatility is very low, and you can see that it's moving sideways since mid-April. All right, so that's where we are going to go to for this morning. If there's any questions, please go ahead and type those in. Any questions, go ahead, type those in. All right, guys, let's wrap up here. Don't see any questions coming in. I want to wish you all a good day ahead, a good evening ahead, and we shall speak again tomorrow morning. Thank you very much for joining me this morning. It is always appreciated. Thank you very much.